Hello everyone. Welcome to Fisk Capital. This is our series on decoding Warren Buffett's letter to shareholders. In episode 5, we are discussing his letter to shareholders for the year 1961. As you can see, in 1961 letter, initially he started usually with explaining about the performance of his firm. So he explained that in the last few years since he started in 1957, the performance gain was way above the Dow-Jones Industrial Average across all the years. However, this was the figure including dividends, and it was overall partnership gain. But to be reminded that a partnership gain doesn't mean that the limited partner will have equal gain. So partnership gain could be this, and if they compound it, the partnership gain for 5 years had become to 51% compared to Dow Jones Industrial Average, which was only about 74%. However, if we go by the limited partners gain, so it was slightly less. Still, most of the years it beat the market except on the year 1958 when partners gain was 32.2%, but Dow's gain was 38.5%. And compared to that, if we go for CAGR, compounded returns, so total return was about 181% for the partners compared to the total Dow gains was 74%. So he was obviously telling that we are way above the Dow and that means we are doing good. But there is a simple question which can come from the investor's mind. What if Dow is not a right benchmark? What if it is very easy to beat the Dow? So he tried to explain this that Dow actually is quite a good benchmark, and there are very limited mutual funds in the last few years which were able to beat Dow. So he did a list of Weisenberg's 70 funds in his charts and statistics, and he saw a record. He excluded 32 funds which are not actually an equity fund but rather being a balanced fund. And of the remaining funds, he was using the 38 funds, they are pure play equity. So obviously the balanced fund, 31 out of 32, did poorer than Dow. So that means his exclusion wasn't being skewed. Now in 38 funds also, he found that 32 performed poorer than Dow and 6 did better. So he used a few big funds to give as an example in this letter from Mass Investment Trust, Investor Stock, Lehman, Tricontinental, and then also there was his limited partners gain. So you can see across years there are very few funds which has outperformed Dow. So in 1958 we could see few funds, Mass Investment, Investors, and Lehman did better, and then in 1960 Lehman and Tricontinental did better, and then again in 1957 Tricontinental did better. So if we see the compounded part, overall Dow was 42.6, investor stock was 42.5. The other two are below Dow Jones. Only Tricontinental was slightly ahead. And if we see, there wasn't any year where it has outperformed Dow significantly during the years of positive return, but it did much better during the years of negative returns. So this clearly tells us that it's not only about beating the benchmark when there is a bull run, but also protecting your gains when there is a bear run. And if you do a very good job in protecting your gains when the market is falling, then that is the time when you are actually going to make a lot of money and give better alpha on a compounded basis. So this is what he spoke, and we are also trying to speak a lot about this in past letters also, where Warren Buffett used to say that his target is just to meet the benchmark during the bull days, but he wants to outperform the benchmark when there is a downfall in the market. So we are also seeing similar thing in India right now, and market is going down. So those funds which are actually protecting gains or going less lower than the benchmark, they are obviously going to end up as a winner in the future. Coming to the details of his method of operation, although he has obviously spoken about it a lot of times in the past, but this time he spoke it aloud again because there was a simple term he used to mention previously, which were called generals and workouts. Now he has also added a new portfolio category called control. So this is a category where he used to take a bigger position, controlling position like 70-80% of the holdings in the stock, so that he can turn around the business which is not performing well because of the management's faults. So that's something which he added for generals and workout. You can obviously watch our first chapter. We are not going to spend a lot of time here. In the last phase, he explained about 70% in Dempster Mill Manufacturing Company. So this was a company which was being undervalued, but there were only 150 or so stockholders. So it was very difficult for the stock to move up without constant buying and selling. So what he tried to do in this particular part is that whoever from his partnerships wanted money, wanted liquidity, he decided to sell their stake and buy for the new investors who want to come in the market, who want to put the money. So that's how he planned to increase the share price with time. I always speak about the fact that uh, the assumption of market that large caps are very conservative and better investment, less volatile, whereas small and micro cap are too risky. I think Warren Buffett also agrees that this rationale is not completely correct, especially when you look for good stocks with good fundamentals and good story. They, no matter what be their size, no matter what kind of business they are in, they are obviously a less risky and conservative bets. This true conservatism is only possible when you have knowledge and reason that why you are doing it. If you have a very good understanding of security, you feel that yes, this is a very conservative security by looking at its valuation, its ratios, and all. Then actually you are having a conservative portfolio. So that's one of the difference which I see a lot of people in the market don't understand conservatism, and they miss out on very good dividend paying stocks in small and mid caps. They miss out on very low PE, PB, high ROE, ROC stocks in small and mid caps just because people have told them that go and invest in Nifty 50. Now, there was also a question on size that maybe the fund is doing better because the size is quite low. So, Warren Buffett tried to answer it that there may be some stocks which have a very small market cap and they don't have many shares to offer. So in those cases, obviously, they will be having some problem as the firm become bigger size. But there are many companies which have so many shares that even if it doesn't matter if you buy 100 shares or 1,000 shares, because the company is quite big, quite massive. So he was talking about that point of view that even if they become bigger, they will have a lot of options in the big size companies to make money, and in the small size also he will have better chances to get more and more control. So that's how he suggested that they will be able to tackle the size issue at least for a long time. Now, if you look into in his portfolio in 2025, there is a problem he is having because of too much money. But in the past, he didn't have such a problem. Then there was some prediction that how market is going to go, whether market will be up, down, and how they are going to perform. So he just mentioned that our target is to do better than now over a long term. He doesn't care about absolute returns in 1 year or 2 years, but he want that in a year when down is 25% down, we should be 15% down. If down is 20% up, we can be just 20% or even okay if he is 19 or 18% up. So that was the part. And then he talks something about miscellaneous things about his company. See, if you are really interested in Warren Buffett type of investing, where you look at companies, you look at fundamentals, you do equity research, and then based on that, you start making money by investing in companies before they are identified by chart analysts or by the market participants, then Fisk Capital is the place for you. We are a SEBI registered investment firm. We have licenses of research analysis, mutual fund distribution, insurance agency, and we basically help you in across financial planning. So I hope you like this video. If there is any doubt, you can comment and discuss more in detail with us. And please suggest if you want to view any specific video on any specific topic, and we will create those for you as well. Thank you very much.